So we thought of getting you somebody who has a very good grip on rural India in terms of financial inclusion and investments. We are talking about Mahindra, Manulife, AMC, Mr. Ashutosh Bishnoi joining us now today. Ashutosh, good afternoon. Thank you very much for your time. Just wanted to understand from you the way mobile phone penetration in rural India is improving. Is the are you getting a sense that even financial inclusion in terms of these financial products like mutual fund, etc., what kind of feedback do you get when your distributors and your employees in so many cities across the country, what feedback are you gathering from them?
Thank you, Ajay. Yes, we are watching the situation in rural India very closely over the last 7-8 months. We have seen rural India come through very strongly. In fact, in times better than urban India. As far as the mobile penetration is concerned, you know that we now stand in India as the third largest country with smartphone penetration rising above 65%. Whereas, the commerce and the financial transactions are still only less than 5% penetration. So the runway is very long, and we are very, very keen as financial products investment managers to see that we go down that runway to close the gap. The key challenge we face is increasingly not the awareness, which is now getting there because the industry, the campaign carried on by AMFI, our own efforts, they're creating awareness, yes. I would not say we are in rural India yet in the small village, but yes, we are getting into smaller towns, definitely. We ourselves get money now from more than 400 cities. So clearly the awareness is getting there. The challenge is getting the transaction done. The absence of distribution links is the challenge. And we definitely see the smartphone, the digitalization of India, the trinity of the Jan Dhan account, the Aadhaar, and the mobile, what I call the JAM trinity. We see that playing a very important role in the growth of the mutual fund industry in small towns and rural India from here on. And we ourselves are hoping to ride the crest of that wave.
Was not exactly rural, but you have very good distribution in tier 2, tier 3. That's what I meant actually, not purely rural, but of course your the group has got a very good rural grip. I wanted to understand about tier 2, tier 3 as well. SEBI chairman also spoke about it in the recent meeting. I saw you were also attending that AMFI meeting. Tier 2, tier 3 things, especially inclination towards equities, what is the sense you get?
Oh, yes, absolutely. In fact, the share of equity AUM of what we call the B30 cities, which are classified beyond 30, their share of AUM is almost significantly 70-80% is equities, which is not the case in the T30, which is the top 30 cities, where the share of assets by the investors is almost weighs out in favor of the debt. Of course, that is also because of the corporate investments. But even in the retail area, they're almost equal between debt and equity. In smaller cities, there is actually a preference for equities. A lot of that preference we are driving through the network, like you rightly said. The Mahindra Group has a very, very deep network. Our own parent company, Mahindra Finance, with all its different entities, is present in more than 1,400 cities. And we hope that someday, we'll go beyond our current 400 reach and get out to wherever they are, because that's where the need is. And that's where the opportunity exists for people to take an investment in mutual funds.
Right. Let's talk about some of the other things which are on the mind of investors, the industry, the mutual fund industry. Do you see liquidity go into broader markets now? What's your outlook there, especially in light of the recent circular as well from SEBI on multi-cap funds being true to label? Intention versus what the challenges would be?
Yes, Ajay, we all watched with great interest the last 8 or 9 months, right? I think many of us were not quite expecting the liquidity flow to come into the smaller capitalization stocks. When the pandemic started, and the market practically fell off a cliff, most of the bounce back one expected would have been in the larger end of the market, in the large cap, if you like. But we saw actually investors take a risk and make a good amount of money from the mid and the small caps. So there is clearly an interest in that area. Speaking of the circular that SEBI came out with, I think that's a slightly different purpose. I think what the attempt there is by the regulator, and rightly so, to try and see that the product labeling is true to the strategy. And I think in doing so, of course, there are several suggestions that have been made by AMFI on how that can be done so that the product is true to label. At the same time, from the current set of products which are branded as multi-cap, the existing investors don't actually take any hit. So it's a matter under discussion, and we are very sure that that there will be a solution found going forward. But that's not to do with creating liquidity in the marketplace in the smaller end, as much as to see that we are marketing a product that is true to its label. But we have seen a definite increase in mid and small cap market in the last 8 and 9 months. Of course, it's a more volatile end of the market. And from the small investors' point of view, we would maintain that people will do well to be careful while entering that area. Even if it's via the funds, of course, funds is better for them. But clearly, in the markets where we go, there is no such preference. In the smaller markets, the preference stays by and large at the larger end of the market, at the larger cap. But we do see greater liquidity coming into the smaller end of the market going forward.
Ashutosh, how are the flows to your schemes? The fund and also industry, of course, is going through a bit of a crunch. SIP data shows slight negative flows. Lumpsum is also getting hit. How are things doing at your funds?
Oh, we have not very dissimilar numbers, except being fairly small and very, I should say, retail, ultra retail oriented. We haven't really lost so much money from equities. We haven't seen a real slowdown in the SIP, but then we are really small. And our case may not be reflective of the industry, which is essentially seeing a shift of preference, I should say, from equities to short-term debt. If you notice, that's where the investor is shifting to. So by way of volume of investors, by way of volume of money, net flows, the net flows are now moving into the debt side over the last few months. And we are also seeing that even in our small fund, we are seeing a greater amount of interest in the short end of the debt market. And I think where it's coming from is investors who have been depositors in the past and continue to hold deposits, and they have an expectation of a certain rate of return from the deposits because their lifestyle needs that. And if they're not getting it from the deposits, then they are looking to find it from the short-term bond funds. So we are seeing flow shifting from equity preference, but which is not really that very slow. I mean, you spoke about SIPs. Yes, there is a tempering down, but we're still in excess of 7,500 crores a month, which is not a small sum of money. So some amount of shift has happened, but clearly debt will play a very important role going forward, given where the rates are and where they could be.
Right. All right, Ashutosh, we'll let you go on that one. Thanks so much for joining us with your insights on the industry and the way things are shaping up in the investing universe. That was Ashutosh Bishnoi with, well, let's take a short break actually. On that note, after the break, we'll get you more analysis on where the market is right now. We're kicking off the October series and some more big voices as far as market is concerned. Stay with us.